So we are about to start today's session. I hope everybody can hear me. Fine. So we'll go to the our previous lesson that we were doing, which is on trial balance. I think we didn't do the question number 2, so quickly we will look at that, and then we'll get on to the new topic today. So last week I gave you all 2 questions. One we did in the class, and the second one is this question, where you had a trial balance pertaining to these numbers, and I wanted you all to do the trial balance based on the information given. So as I told you last week, first thing that we need to do is to identify the class of account, which is whether it is an asset, liability, income, expense, or equity. So accordingly, so we were on question number 2, where we were looking at the trial balance question. So first thing that we need to do is to identify the class of the account. So in this question, you will see cash in hand, cash at bank, both are assets. Capital is an equity. Drawing is a negative equity. Purchases, expenses, sales income. Machine is an asset, it's a fixed asset. Furniture is also a fixed asset. Debtors is a fixed asset. Creditors is a liability. Opening stock is an asset. Wages is an expense. Rent is an expense. Salaries is an expense. And bills payable is a liability. So accordingly, when you put it, you should get 180,000 as your trial balance. So I hope that was clear with you all. Can I get a feedback, please? Are we clear about that question? Okay, fine. So what we are going to do today is a new topic. Which is on the suspense accounts and the accounting errors. Right. So as you know, with regard to the trial balance question that we had and the subject of the trial balance, as I told you last week, the real question, the trial balance question in the exam will be slightly different, and it will be at a higher scale, which means by the time we go to the exam, we have gone through all the lessons. So you will come across more and more items that are pertaining to your income statement as well as to the statement of financial position, which is your P&L and the balance sheet. So the trial balance might not look as simple as what we did now. So there will be more items, more new items, where the terms that you have to be very familiarized so that you understand whether it is an asset, liability, income, or expense. So it is very important that as we go on, every new term that you learn, you have to note it down to understand whether it is the class of the account. So likewise, when we reach by that to the exam, the trial balance will look like a lengthy one, and you need to do it or prepare it in the exam, where like what we did now, which might have more items compared to what we did. So what we are going to look at now is, now even though we say that we have extracted a trial balance where the debits and credits are equal, so we have proved the mathematical equality, everything, all those are fine. but still the trial balance will not detect any errors. And there could be instances where this trial balance will not balance also. So those are the two situations that we are going to look at now. One is where the trial balance is perfectly balanced, the debit total and the credit total are agreeing, but still there could be errors in that particular trial balance. And secondly, where there is an instance, the trial balance may not balance, which means there is an error or mismatch in the trial balance. So how do we tackle with these two situations? The errors that we may come across and the imbalance situation in the trial balance. So starting with, what is an accounting error? So accounting error are the mistakes committed by in bookkeeping and in accounting. So as you know, the bookkeeping job is not an easy job. It's a tedious task. But in doing that tedious task, sometimes what happens, the bookkeeper or the accountant might do certain mistakes. These mistakes can be classified into various categories. That is what we are trying to understand. And that is what is known as accounting errors. The mistake may be one relating to routine or one relating to principle. So now you need to know what is principle is, because we have already learned concepts, assumptions, rules, principles. We have learned those. And this mistake that you are committing could be something which is routine. So every day you are doing it, as a result, it's a mistake. Or there could be something fundamentally wrong due to the wrong principle that you have adopted. So application of a concept, let's say, or application of a rule or assumption in the wrong manner. So you know that the result of that would be a mistake once again. They may occur in entering the transactions in the journal or subsidiary books, or they may creep at the time of posting into the ledger. So now we are talking about when can these errors can creep into our accounting. So one is at the time of entering the transactions in the journal. Now currently you know that we will not do those in our business environment, where we will not sit somewhere and do the debits and credits. This is the debit, these are the debits, and these are the credits. That we don't do. We directly post it into the system. But in the manual bookkeeping, people first have to draft the journal. So at the time of entering the transactions in the journal, you make a mistake. Or there could be a situation where you enter these journals in the subsidiary books. Now you know what is subsidiary book is now. That is the books of prime entry. The books of prime entry. So there could be a mistake by somebody at the time of entering it in the prime entry books. So that is the second situation. And the third situation is where you might have posted it to the wrong ledger, or you might have posted it to a wrong account when you are posting it to the ledger. Now this is something which can commonly happen even in your business environment. Let's say a customer has given you a deposit, say together with 20,000 rupees. He has given you a deposit slip. He has clearly written his number, account number, and the amount. But at the time of posting this transaction in the system, you have entered one digit mistakenly. Unfortunately, when the change with the change of the one digit, there is another account in your bank. Now, what could have happened? Instead of giving the credit to the customer that I originally mentioned, it would have gone to some other customer. So this is something we call as posting error. Posting error. You might already know these terms. So therefore, the errors may be committed while recording, classifying, summarizing our accounting transaction. So this we have already learned under the accounting process. What do? We record the transaction, we classify the transaction, we summarize the accounting transaction. So the errors can happen in all these stages, okay? Right, so let us now go through one by one the types of errors that we are talking about. First type of accounting errors. So there could be an error called clerical error. So now in good old days, I don't think that now we are using this term. In good old days, the person who is doing these type of accounting work is known as a clerk. But it is very rare that we use that term now. This person, so-called person clerk, is the person who is supposed to enter the journals, record them, post it to the ledger. So all these jobs are handled by the same person. So what happens as time passed on, the amount of work handled by this particular person called clerk became very large. So due to the tedium of the job, which means due to the increase in volume of the tasks that he has to perform, sometimes he makes mistakes. Sometimes he makes mistakes. That is, forgetting to post certain transactions or posting it to an incorrect account. So many things can happen. So what had happened is the accounting people, they have named this particular error to call it as a clerical error. So clerical error is a error which is committed by the person who is handling the task. Then the second type of error is where we call it as ignorance error. This is something where you are not being aware of the distinction between an asset and an expenditure. Now there you have to have a clear demarcation. Now once we go into the topic of LKS 16, you will understand this. But before that, just to give you a brief idea, sometimes you might get a transaction which may look like a fixed asset as well as an expenditure. Now you have a problem to identify to which side I should put this. So let me give you an example. This is a classic example that I make use of. So I will use that same example. You have a motor vehicle in your business, say a delivery van. This delivery van is worth, let's say, 40 lakhs, 4 million. Okay. So this 4 million van is now being used in your delivery purposes. So you supply goods to various places and you also deliver your goods to your showrooms. So this particular vehicle is used. Due to the wear and tear, now there is a situation where you need to replace all 4 tires of your vehicle. So let's say each tire is going to cost you about 15,000. So you have to incur about another 60,000 in order to get this vehicle running back again. Now the problem is the 60,000 that you are going to incur, because you have to pay. Will it be added to the fixed asset that is already, which is having 4 million, or this is an expenditure to you? This is where the question comes. You know, without these 4 tires, the vehicle also cannot run. But the question here is whether I should take this cost of 4 tires and add it to the existing value of the vehicle, which is 4 million, or should I bear this as part of an expense of maintaining this vehicle into my expenditure? Now, being an accountant or clerical person or whoever, you should know the difference between these two. If you are not sure with this, then the ignorance error can happen. Ignorance error can happen. So this is one example, such example, where you need to know the distinction between an asset and an expenditure. Thirdly, there could be frauds. There could be frauds where people intentionally do mistakes. So these frauds may include omitting to account for receipts or paying fictitious vouchers. That is, you exclude certain income that you have received. You have received an income, but you have not taken into your accounts. You have just put aside or hidden those transactions. Sometimes what happens, you pay for vouchers which are not real, artificially created vouchers. So even when you pay for those type of vouchers, that is known as a fraud. Now, due to this fraud, what happens? The ultimate trial balance that you are going to extract is of no use because it is going to come with lot of errors. It is going to come with lot of errors. So the clerical error, ignorance error, fraud, all these are now going to end up in creating so many errors, and the result of that is not visible in your trial balance. Because the trial balance will good balance because the total debits and the total credits will agree. But that will give you only a mathematical equality. It will not detect these type of errors that we are talking about. So when these errors can happen is when you are doing the accounting function. Then we look at the next set of errors, where you all know the double entry error. So double entry error is very straightforward. Failure to post an amount entered in a book of prime entry. As I told you, you have entered transactions in the books of prime entry, but from there, you have not taken it to the main ledger. Now what happens when you take it from the books of prime entry? You have to post a debit and a credit, either to your cash, either to your sales ledger, debtors ledger and the income, or to your purchases ledger and to the expense. But what has happened here is you have totally forgotten to post this transaction. That is known as a double entry error. Secondly, we understand something called error of commission. Error of commission. Now, this has to be very clear. Posting to an incorrect account of the correct class. Now, what do you mean by correct class is, that is what we have been talking about, the class of account, whether it is an asset, liability, income, or expense. Now, this kind of an error is very straightforward. You are posting to an incorrect account of the correct class. What does it mean? Let's say you have incurred an electricity expense. So you have received a bill, electricity bill, and your officer has requested you to make the payment. So what do? You have to debit your electricity expense and credit the Ceylon Electricity Board or the LECO account. That is the transaction, double entry per se. Or you will generate a pay order, or maybe you can go and pay it by cash also. Now the problem here is the debit account is the electricity expense account. You know, you have identified the class correctly. But at the time of posting this transaction, what do? Instead of electricity expenses account, you go and debit that to the telephone expenses account. Okay. So what do we mean by error of commission is posting to an incorrect account of the correct class. Yes, the telephone expenses account is also an expenditure account, which is the correct class. But that is not the account. The purported account is electricity expenses account. Okay. So error of commission is posting to an incorrect account. If you are using a printed copy, please underline. It is very important, the posting to an incorrect account of the correct class. Why I say this is because in exam, sometimes you might be given a multiple choice question to mark the answer for error of commission. So you need to know what is it exactly. The next error is slightly different to what we learned now. Error of principal. Posting to an account of an incorrect class. Now, this is something similar to what I told you earlier. You have incurred an expense and you know this is not a routine expense that you have incurred. It's a fixed asset. It's an asset. But at the time of posting this transaction, you go and post it to the expenditure account instead of the asset account. That is where posting to an account of an incorrect class. So at every point in time, you have to make it a point that you understand what is this transaction is and what are the involved class of accounts, whether it is asset, liability, income, expense, or equity. That is very important. And by the way, all these errors that we spoke about happens at the stage of posting. So at the stage of posting means you are posting this transaction either into your system or entering it in your ledger manually. Next set of errors. Error of omission. So earlier we learned error of commission. Now it is error of omission. What does this mean? Failure to enter in accounts. This is something like you forgot to enter the transaction, both the debit and the credit. So very straightforward. You have omitted a transaction. That is what it means. Omission means you have omitted a particular transaction. So it's very straightforward to say that that is another type of accounting error. The next type of error is entry error. Entering and posting an incorrect amount. Now this is very clear. Instead of 5,000 rupees, you entered it as 50,000 rupees. What is the mistake here? Putting an additional zero. This would have happened to many of you all. Where while you are working in the bank, sometimes what happens due to stress, you would have accepted 5,000 only, but you might have posted 50,000. And you have forgotten to look at the validation also. So by the time the customer has gone and you have entered so many other transactions. But what happens, this gets detected when you are trying to balance your cash position at the end of the day. Why? You will be short by 45,000. Instead of 5,000, you have posted 50,000 means you will be short by 45,000 rupees cash. So you will detect at that point in time and you might rectify that. But suppose if there could be errors which may not be getting detected. Now, normally when it is a cash related error and when we are used to balance the cash position at the end of the day, you might detect these type of errors. But there can be transactions which are not relating to cash. And those type of transactions, when they occur with an incorrect amount, then those might not get detected at all. Sometimes your superiors or sometimes the auditors might come and detect those. Error of duplication. That is very straightforward, where you enter a transaction twice. The same transaction being entered 2 times. So those type of errors are known as stage of making the prime entry. Because from the prime entry books, you have to post it to the ledger. So error of omission means you have not taken the balance and posted it into the ledger. Error of omission. Entry error means you have taken it correctly from the prime entry books, but posting it to the ledger, you have posted a wrong amount. Thirdly, you have taken it from the prime entry books, but you have entered twice into your. So that happens at the stage of making the prime entry. Prime entry. So there could be another set of errors where now this is at the point of actually extracting the trial balance. Extracting the trial balance. So now you have done all the accounting part of it, and now you are going to prepare the financial statements. So what do? You go to the accounts, individual accounts, balance them, and you find out what is the balance carried forward, or what is the balance brought forward to the next year, financial year. So you will pick all those account balances. But unfortunately, you have not picked one particular account. The balance of one particular account is not picked to the trial balance. Okay? What happens? Your total debits and credits won't agree, because the balance pertaining to one of your accounts have not been captured. But this doesn't happen when you are using a computer system. Okay? This difference you have to understand. When you are using a computer system, those computer systems will be defined in such a manner that you will not exclude any account at the time of extracting the trial balance. You will pick all the accounts on earth to get reported in the trial balance. Whether the balance is there a balance, or if the balance is zero, you don't look at it. All the accounts have to be captured. But when you are doing it manually, because bookkeeping had been happening very manually from long time ago. So as a result, what happens? There could have been situations where people have forgot to include an account balance in the trial balance. Secondly, stating the amount wrongly in the trial balance. That is also can happen. You have balanced the account. The amount is 300,000. But when you are taking it to the general, trial balance, you have entered it as 30,000. What happens? Your trial balance will be 270,000 short. Okay? The account balance is 300,000, but when you are writing it on the trial balance, you have written it only 30,000. So your trial balance won't balance. Again, this cannot happen in a system generated trial balance. But if you are doing it manually, this can happen. Now these two errors that I spoke about is very important as far as you all are concerned, because in exams you are going to do this. When you are requested to prepare a trial balance, it is you who is going to take from the question paper to the answer script the individual accounts. So you have to remember that you have picked all the accounts from the question paper to the answer script when you are preparing the trial balance. Secondly, again you are going to pick the amounts from the question paper to your answer script. Again, you have to be very sure the amount that you are taking from the question paper should agree with what you have written in the answer script. Otherwise, you might be wondering why this trial balance is not balanced. Okay, so don't let that mistake happen. You have to be very carefully pick all the accounts into your answer script, and also the amounts correctly into your answer script. This error is also very important. Again, this also relates to you when you are doing the exam question. Stating the balance on the wrong side in the trial balance. Now, this also can happen. Human errors can happen. There is a balance of 50,000, a debit balance, but at the time of writing it to the answer script, you have written it on the credit side. This can happen. Stating the balance on the wrong side means instead of putting it in the debit column, you have gone and put it in the credit column. Again, the trial balance won't balance. So you will know now all these errors can happen at the stage of extracting a trial balance. Extracting a trial balance. So do we have any questions so far? No questions. Okay. So let's continue. Now we are going to look at a totally different kind of an error, which we call it as compensating error. Compensating error. So compensating error is an accounting entry that do not disturb the balancing of the trial balance, but which are again errors. This we call it as an error of offsetting error. This is also known as offsetting error. The mistake that you do in one set of entries, the debit credit, gets offset with another set of debits and credits. Okay. I think I would have told you this example. Let's say there are two customers. There are two customers coming to your branch to do transactions. So one person is depositing money, let's say 100,000. So when you are accepting the cash, you are taking money from the depositor, but whereas at the time of the transaction has been posted to 100,000, but the cash that you have received only 90,000. Okay. So you have posted the transaction for 100,000, but you have received cash only for 90,000. So what happens? Your debit will be more, sorry, your credit will be more, but your debit will be less. Why? You have received cash only 90,000. Clear? Similarly, there is another transaction of another customer where that customer wants to withdraw money. That customer wants to withdraw money. So again, you might have done the same mistake. You would have posted the amount as 100,000, but you would have given amount cash as 90,000. Now you see, error of one place would get set off against the error that you have done for another customer. These type of errors are known as compensating errors. Why? 90,000 came in, 90,000 went out. No problem. But the original entries that you have posted are for 100,000. So there is no issue with regard to the balancing of the trial balance. Trial balance will balance anyway, no problem. But the errors that you have made in both instances will compensate with each other. So even though the trial balance is balanced, you can't ignore this as to be an error, because there is a fundamental error that has occurred with both these customers' accounts. Both these customers' accounts. So later on, these customers will look at, when they look at their account, and one person will look at the money that he has got, they might come back to you and report the error. But without that, you might not detect these errors sometimes. So it is usual to accept a trial balance in which totals agree as providing a prima facie proof, though it is not conclusive, that every debit entry has been matched by a credit entry. So we accept that. When the trial balance is balanced means we say that to every single debit that you have posted, there has been a credit. There has been a credit. But it doesn't mean that the trial balance doesn't have errors. It can have all the errors that we have learned so far. So there is no guarantee of the accuracy of accounting, because despite errors, a trial balance may perfectly balance. Now look at the scenario from the exam point of view. You have been given a question with a list of balances and you have been asked to prepare the trial balance. Okay. So you have done a trial balance. The debits and credits are agreeing, but there is an error in your trial balance. It could be some of the errors that we discussed right now. So, but still, you have a balanced trial balance. Now, based on that trial balance, you prepare financial statements also. Still, it will be very good to go with the trial financial statements also. There won't be any problem. But the question is whether your trial balance, the financial statements are accurate. That is the question where we have an issue. Whether your financial statements are accurate with all these errors. Okay, so we have to be mindful about preparing financial statements is not a mere exercise using the trial balance. Before getting into the preparation of financial statements, we need to ensure that our trial balance is free from any errors. Free from any errors. So as a result, I would like you all to take down a note at this point in time. In case there is a question of this kind in the exam, you should be able to answer. Okay, so let us take down. In preparing the financial statements, in preparing the financial statements, we make use of the trial balance that is extracted. As a result, we have to be very careful. To ensure that the trial balance is free from any errors. Free from any errors. Okay. So do you have any questions at this point in time? Okay. So let's proceed. The next type of error that we are going to look at is called the transposition error. Transposition error means the accounting entries that do not disturb the balancing of the trial balance, but then again, which are errors as far as the trial balance is concerned. So as far as we are concerned, if the accounting function is not computerized, the transposition errors are very common at each of the accounting stages as mentioned earlier. And if a trial balance fails to balance, right, and the numerals in the difference will cause an error. So let me illustrate this. By way of in the board so that it's very clear to you all. So now let us take a trial balance. Okay. And let's say particulars. And the debits and the credits. Okay, this is the trial balance that you have got. So you will see after extracting the trial balance, you have put down all the list of balances. Debits have been put, credits have been put, and you have total. But when you total it, you have a problem. What is the problem? The debit total does not agree with the credit total. So we don't need to go into the numbers, but as far as the total is concerned, we know that the total does not agree. The total debits does not agree with the credits. Okay. So I would like you all to take down this quickly example in your note. I'll give you about 2 minutes. We have a problem here. What is that? The trial balance does not agree. Trial balance does not agree. So you know, if the trial balance had an equal amount debits and credits, that is the debit total to be 256,228 and this is also 256,228, or the credit total of 237,938 and the debit total is also 237,938, then there is no problem, because that will give us some assurance of the mathematical equality of the trial balance. But now here we have a problem where the trial balance doesn't agree. Now why does it doesn't agree? Because there is some error in the amounts that we have taken. Otherwise it would have agreed. Now why there is an error in these balances? It could have been some other error. Okay. So before getting into that amount of detail, we need to check whether this is due to a fundamental mistake. Fundamental mistake. Okay, right. So what is the first thing that we do? Let me erase this side and write it, because I don't think I need this to be on the board. So what is the first thing that we do? What we do is we take the difference between the debits and credits. Okay, generally what we do, we take the larger total and deduct it with the lesser total. So 250,628 minus 237,938. Okay, 250,628 minus 237,938. So when you deduct this, you get an answer of 12,690. Okay, so that is what basically in your presentation slide, the third point is that where you have a difference of 12,600. Now, what do we do with this? We do a further analysis. Now, what is the analysis? What do is we split this 12,690 into individual numbers. That is 1, 2, 6, 9, 0. And we add each number with other. Okay, add each number with the other. What do we get? 2, 1 plus 3, 3, 6, 9, 9 plus 9, 18. Okay. Thereafter, what do? We further add this like this. 1 plus 8. And now I will end up with the number 9. Okay. Now, for any example or any question where there is a difference in the trial balance, the first thing that you do is you check this. What is the difference between the debit total and the credit total, or credit total and the debit total? You identify that number. Then you split it into like this and you keep on counting. So until you reach a single digit, you have to keep on doing this. Say if it is a bigger number, when you add the numbers, then you get another number, then you have to further do it until you get a single digit. And very surprisingly, if the single digit is 9, this is very specific. If the single digit, the ultimate single digit that you are getting is 9, then we say that there is a transposition error in this trial balance. There is a transposition in this trial balance. Is that clear? Okay. Are we clear on that? You take the trial balance, debit total and the credit total, right? And you look at the difference. And when you get a difference of this kind, you further expand it and add the digits. And you get this answer. You further expand it and ultimately you get a single digit. If this single digit is number 9, then we call it as a transposition error. If it is any other number, that is from 0 to 8, we are not worried. Because that is a different type of an error. But if it is number 9, then we call it as a transposition error. Okay? So quickly take down this. Okay? Right. Now what does this mean? The transposition error means what? When you get the answer to be 9, it means that The mistake is in the numbers that you have taken here. Okay? The mistake is with the numbers that you have picked here. Not any other errors that we spoke about earlier. Okay? That is error of omission, commission, fraud, whatever that is there is not that. This is very simple. The number that you have put here is wrong. And what is this error? What is this error? So I think most of you might know where, let's say, you have a number 698. Let's say a number 698. Okay. You write it as 689. What is the problem here? Okay, this is the original number. You write it as 689. What do you call this? Normally, what do we call this? Anyone? There is a special name given for this. I would like you all to send the answer as a chat. What do you think the name given for this kind of an mistake? Have you heard of a term called inversion? Inversion. That is, there is a shift between the two numbers here. You see, 98 has been written as 89. Now what happens here? What is the difference between these two? You see, the difference between the two is 9. Okay, so when you get these type of an error is why? Because the number has been written with an error of inversion. So this so-called inversion is in accounting terms known as transposition error. Transposition error. That is what we are trying to understand. We call it as transposition error. So as a result, let me go back to the screen. So the error that we spoke about, 12,690, and when you reach, it gives you 9. So this is the graphical illustration or the illustrative example that you can think of for this transposition error or inversion. You will see. If the difference is 9, how can it happen? The digits can invert like this: 0, 1 against 10, 12 against 21, 23 against 32. Likewise, look at the last one, 89 versus 98. That is the example that I took. The same can happen even we like this. 0, 2 can be written as 20. So 20 and 2, what is the difference between the two? It's 18. 18 means again 1 plus 8, it is back to 9. So your differences could be ultimately ending up to this level: 9, 18, 27, 36, 45, 54, 63, 72, and 81. How it can happen? When you commit mistakes of writing numbers or taking into your trial balance like this, these type of errors can occur. These type of errors can occur. So it is very clear that the transposition error can happen in one of these ways, as I mentioned here. Okay. So that is all about accounting errors. If you have any questions, you can raise it now before we get on to the next topic. If you have any questions, please post it. Yeah. Okay, hope it's clear to everybody. Right. So let's get back to the presentation. So the transposition error is also clear now. So altogether, if you look at all the accounting errors, the transposition error is slightly different, because transposition error can be identified straight away when you look at the trial balance and look at the two totals. If there is a difference, and if the difference is expanded and added, if you are reaching the single digit of 9, then you can conclude that it is a transposition error. So what you have to do is simply go back and look at all the numbers that you have taken into the trial balance, whether there is this inversion. Now this can happen even in your exams. From the question paper, when you are taking the balance into your answer script, sometimes you would have written these numbers with the inversion. So you have to first go back and check whether you have written all the numbers correctly. And if that error still persists, right? So for example, your difference is not 9, something else, then there is a fundamental mistake where you have to go back and look at whether you have made any errors with regard to all the other errors that we learned. That is, prior to this, we looked at so much of errors, right? This one could be this one of these, it could be any of these, or it could be any of these also. Okay, so you have to go and check one by one what type of an error. Even this one could be one, but still you might not get detected. So other than the transposition error, any other error you might have to go back and look at in detail. Okay, so that is what transposition error is. So the next item that we have to learn is basically something to do with the suspense accounts. Now, why we call it as suspense accounts? Now, sometimes what happens, you prepare a trial balance and the trial balance doesn't balance. So you have gone through whether there is a transposition error. No, there is no transposition error. Then you have gone back and looked at all the other errors. For other errors that we learned, you go and check one by one. Still, you can't identify any of these errors. Now, what do we do? Because we can't be just keeping a trial balance open like this without being balanced and proceed further. Okay, so we have to find a way out to come out of this imbalance situation in the trial balance and proceed with the preparation of financial statements. Now, even this happens with regard to you in your day-to-day operations, where there is a difference in the cash position at the end of the day. So where all of your colleagues, your superiors will get together and find out what is this error. And there could be a situation where at some point you see that you are unable to identify that today. So what do? Will you put it aside and just forget it? No, you can't do that. So you have to work around an alternative and proceed to the next day. The business has to go on, so you have to proceed to the next day. Likewise, when preparing trial balances also and the financial statements also, there can be situations where these trial balances are not balanced. So then what do? That is what we are looking at for suspense accounts. The meaning of the term suspense is associated with uncertainty. Uncertainty means we don't know. What is it? So when the trial balance of a business is not balanced, mean there is some problem with that. There is some uncertainty into this particular suspense account. So as a result, now in order to resolve this issue, we have to come out of this uncertainty that we are having. So when we have this position where the total debits fails to match with the total credits, the difference that we look at, let's say it is not the transposition error also, now we have a problem here. So in order to come out of this issue, what do we do here? Let me make use of the board. We'll go back to this original issue. Okay. Right. Let me make it very simple, not a complicated one. So one side you have 250,000, and on this side you have 137. Okay. Right. A straightforward example. So now you know the difference is 13,000. 13,000 means 3 plus 1, 4. So it's not a transposition error. There is something other. And when you go into detail, you are still unable to identify this. Now this is what my position is, trial balance position. But I can't just keep it like that without proceeding further, because I need to get from here to the financial statement preparation, and then I have to find out somehow what is the reason for this difference. And if there is a difference error, I have to rectify that. Now, how do I proceed further? Because I need to prepare the financial statement. So what do? I try and forcefully balance this. So how do I balance it? This side is 250, this side is 237. So what do? I bring in a 13,000 onto this side. 13,000 onto this side. Right? So this is a number that I have brought in. Okay? So that now what happens? The trial balance will balance 250. Forcefully, I have made it 250,000. Now the problem is this 13,000 was not from an account in my ledger. You see? Now what I have taken, say this is cash, right? This is furniture. Likewise, you have items. But this 13,000 is all of a sudden we have come and put it there. So this is not from a list of account that I had in my ledger. So I call this therefore a suspense account. You see? Due to this reason, I call this account as a suspense account, because this is not an account which I have taken from my ledger. Just for the purpose of balancing this trial balance, I have brought in this. Okay. So I would like you all to take down this. Better if you can initially take it down, make this 237, and then with a different color of a pen or a pen to write this and write the total amended 250,000. I'll give you about 2 minutes. Quickly take it down. Suspense account is something that we have brought in to make this trial balance. But then later on, I need to go back into details of finding this difference, why this has occurred. And once I have discovered the errors in my trial balance, I have to pass the double entries, the respective debits and credits. So what will happen? Those debits and credits will go into this and against this. With that, this becomes 0 at some point. Okay, this is the process. So initially you bring in an account called suspense account to make this trial balance agree. Then you will go into details of finding the errors. So when you find each error, you have to pass the double entries. You have to make the double entries. So you will debit here and credit here. You will credit here and debit here. So likewise, you will generate the journals to make this suspense account balance 0. And this comes in as a question in your exams, where they will give you a trial balance which is not balanced. So forcefully you make a suspense account and balance it. And then they will give you certain items, descriptions, where you need to identify and understand those and pass accounting entries for those so that this gets wiped off. So we will do questions. You don't worry at this point in time. We will do questions to understand how do we rectify the suspense account to make it 0 and then arrive at a perfect trial balance. Okay. So I would like you all to take down a small note here. There may be instances where a trial balance may not balance. That is, the total debits do not agree with total credits. Next point. In such instances, we verify the difference, to find out whether there is a transposition error. Whether there is a transposition error. Transposition error. Next point. Suppose if it is not a transposition error, suppose if it is not a transposition error, it requires further investigation. Next point. However, to proceed with financial statement preparation, we will make the trial balance to balance by creating a suspense account, and posting the difference to the respective column. Okay, so in this case it is 13,000 that we are posting into the credit column. So if you go and put it to the debit column, then this will go further. We don't do that. We will put it to the relevant column. Next point. The suspense account has to be cleared, has to be cleared, has to be cleared, has to be cleared before preparing the financial statements. Financial statements. Okay, so I have given you in detail the steps how we have to handle this, but in exams, what will happen is you will be given a question that is with the list of balances. So you will put it into and prepare a trial balance. The trial balance will have a difference, so that you will create a suspense account, or they might give you with a suspense account. Okay, so you have to be very clear. Either you have to create a suspense account, or they might give you the question with a suspense account. Whatever it is, you have to be very clear what you need to do. So when you put the suspense account, the totals will agree. The totals will agree. Then they will give you further information relating to the question, where you will identify the errors and rectify them by posting the journal entries. So you know what is journal entries is. You have to post the relevant debits and credits. When you post the relevant debits and credits, sometimes what happens, one of the debits will be to one of the listed accounts already, and the credit will go to the suspense account. And there could be instances where the a debit will go to the suspense account and the credit will go to the any other account that is from your list of balances. So ultimately, the suspense account balance will become 0. And that is the point where you can proceed to prepare the financial statements. Okay, so that is all about suspense accounts. So we have learned 2 topics today. One is the accounting errors, and the second one where with regard to the suspense accounts. There had been a question posted by one of you all saying, if the original number is 968 and write as 698, then the difference is 270. Is this error called as transaction error? Right? Now, as far as the error is concerned, you can call it as a transaction error because you have posted it wrongly. But we are not talking about that here. Right? This is where an error that we are trying to identify at the time of extracting the trial balance. Now, the difference that we are talking about is not relating to a transaction, but relating to the trial balance totals. Okay, so don't get misled. An error in the transaction, you have to deal it separately. There could be a transposition error or whatever. That is not matter. If the difference is in your trial balance totals, then only we talk about the transposition error. Okay, so don't get misled with the concept. The inversion can happen even at a transaction. Okay, but what we are talking about here is at the time of preparing the trial balance, you get a difference. And this difference have to be further looked into whether there is a transposition error. We are not talking about individual transactions. Okay, right. So I hope it should be clear to the person who has raised the question. Any other questions? If you have any questions, please, you can post it. Okay. So if that is the case, we will get on with, I would like to go back to the bank reconciliation topic, because there was one question where I wanted you all to do it. I don't know how many of you all have done it. Has anyone done it? The bank reconciliation, second question. We'll look at this question. So bank reconciliation statement prepared as at 2 days. I have given the question clearly to say that you have a bank reconciliation here pertaining to 2 days. Okay? Right. What does it mean? So an extract from the retail shop cash book maintained is given, and you are required to prepare a bank reconciliation statement as at 21st January and also on 26th January. Right? This is a little bit tricky question where you are required to do reconciliations pertaining to 2 particular dates using the same piece of information. And this is what the question is. Now the cash book is given there. And also the bank statement is given. Okay. So now you are required to prepare reconciliations pertaining to 21st and 26th. But unfortunately, the 2 books have been given as of 26th. You see, the 2 books have been given as of 26th. Now, actually speaking, what is 21st? Now, doing the reconciliation as of 26th is not an issue for you. I see that it is very straightforward where you can do the reconciliation for the 2 days, 26th. But doing it for 21st means, what does it mean? 21st mean the opening balances. You see, 21st means the opening balances for these 2 dates. So the difference here is that you need to identify the 21st opening balance is the reconciliation that they have requested. One is for 21st and the other is 26th. Now, how do we do a reconciliation for 21st? So in order to identify that, first we need to look at the 2 balances. What is the cash book balance and what is the bank statement balance? The cash book balance, you will see, it is 1260. Whereas the bank statement balance is not that. It is 150 rupees, and very importantly, you need to note that there is 2 letters which shows OD. Let me tell that. So if you look at in the bank statement, in the cash book, in the bank statement, we are looking at 21st. So in the cash book, I think it is 1260. It's a debit balance. Now in the bank statement, it is 150. But the problem is it's an overdraft. They say overdraft. Now what does this mean? 150 overdraft means, now generally when there is a debit balance here, if there is a credit balance here and there is a difference, we don't have an issue. But here it is a debit balance And there also it's a debit balance. Overdraft means from the bank books, they say you need to pay me 150 rupees. Whereas as per my records, I say that the bank is supposed to pay me 1,260 because this is an asset for me. Now there is a contradiction. Now there is a contradiction. That is, I am saying that it is an asset for me where the bank has to pay me 1,260. But according to the bank says, no, I don't need to pay you. You only have to pay me 150. That's why I am showing it as an overdraft. Now the question is, how do I reconcile these two? How do I reconcile these two? So what does it mean? From if you are starting with the bank statement, you are 150 negative, and you are reaching to the cash book means you have to reach 1,260 positive. So how will you do it? That is the question. How will you do it is the question. Any idea? So what you can do is you just go through the transactions. Just go through the transactions. That will give you some idea. Let me open the bank reconciliation. So you will see in the question, what are the transactions that will lead to this difference? Can anyone identify? So for that, what you need to do is you mark off all the items based on the two statements. Based on the two statements. When you mark off the items, you will see on the bank statement, there has to be some checks. There has to be some checks which are getting presented after 21st. Which are getting presented after 21st. Now what does that mean? I have given a check prior to 21st, but those checks are just coming and getting presented only after 21st. So if you are doing a reconciliation as of 21st, you obviously know that the checks that I have already issued and getting presented subsequently will have an impact. So I need to take those checks and go and adjust it to the 21st. Go and adjust it to the 21st. Likewise, I have to find out whether there are any deposits which I have made prior to 21st and getting realized on 21st or maybe after that. This is the point that you need to identify, because we are using the same piece of information to do a reconciliation on two dates. One is on the 21st, the other one is the 26th. So you have to be very careful. The 21st is your opening balance. 26th is your closing balance. So the reconciliations are to be done for the opening balance and for the closing balance. So for the closing balance, you know how to do it, because you know when you mark off all the items, all the remaining items will have the impact. But to do it for the opening balance is where the question is. So what could be the impact? Impact is any checks deposited prior to 21st getting realized subsequently. Any checks that I have issued prior to 21st getting paid after 26th. So this is what you need to identify from the question after marking off the debits and credits in both locations. So I will leave it to you all to do it, because if I give you the answer, no point. So you have to make it a try. So you give it a try and see whether you can make it with this input that I have given now, to see whether you can do it. Okay. So I'll give you one more week, try and do it, so that we will do it thereafter. Okay. Right. So with that, I think we can wind up today's session, because there is only 10 minutes left. And next week, we are going to start with a new topic, which is on LKS 16, which is the first standard that you are going to learn. So very important. So don't miss the class. I would like you all to please revise all what we have learned so far, because it is very important. As we go on, you need to keep on updating yourself, because if you wait for the last to update yourself, it will be very difficult. So try and start revising all the work that you have done so far. And as I told you, if you have any questions, please post it as and when we do the class, so that I can take up those and answer then and there, because you know that it is not an interactive class. So if you are in the classroom, I can see whoever wants to ask a question and I can answer directly. But here it is not the case. So you have to ensure that wherever you have queries, you mark it down and then you can post it as and when we do the class. Okay. So with that, I will wind up the class for today. Thanks for joining, and hope we'll have a nice weekend. Thank you.